Can you really use your retirement savings to buy a business without huge penalties and tax bills?
Turns out, yes. It's called ROBS, Rollover for Business Startups, and it's how a lot of everyday people fund their first business purchase.
Hey, we're Doug and Amber,
Hi.
and today we're here to figure out
How to use your 401k to buy a business.
after over 20 years earning our keep in corporate, we needed a pivot to shake things up and try something completely different, working for ourselves.
But we don't have trust funds or millions in the bank.
We just believe we can figure it out.
Right, but we're not experts. So if you're about to make any big decisions, please talk to someone with actual credentials first.
We're just two normal people trying to forge a new path. So let's go figure it out.
Let's do it. So let's start with what the program is. It's called Rollover for Business Startups, or ROBS, since everything in business has to be an acronym.
Ugh, I swear, every time I learn a new acronym, I feel like I should get a merit badge or an angel should get their wings or something.
So we've done a bunch of research and we've spoken with experts, including an expert from Guidant Financial. They're ROBS specialists, and here's what we've learned.
ROBS essentially lets you take your retirement savings. Most of the time it's a 401k, but sometimes it's others. And it lets you invest those retirement savings in your business by letting you form a company and then invest your retirement funds into that company.
Yeah, ROBS lets you roll over your retirement funds into a brand new C-Corp that buys the business. No early withdrawal penalties, no taxes on the rollover, and you can use ROBS to buy almost any kind of business as long as it's federally legal and and it's not just a hobby business. It has to be something where you're not just a passive investor, but you're actually an active employee.
Yeah. And to be clear, ROBS is a pretty cool program, but like anything that's involved with the US tax code, it's complicated. So hiring an expert to guide you, it's a must.
Hey, that's my line. But she's right. If she's giving you that wisdom, it's definitely true, because Ms. Independent over here, she likes to try and do everything by herself. Most ROBS providers also do have the requirement that you have at least $50,000 in your retirement account to qualify for the program.
Anywho, basically, you set up a C-Corp and you create a 401k inside that C-Corp, roll your retirement money into it, and then that plan buys stocks in the company you want to buy. Presto, your business has cash to operate or the equity to get the loans.
So what is a C-Corp again?
Oh, sure. Yeah. Okay. So quick side note, ROBS requires you to use a C-Corp. That's just one type of business entity. Here's a simple rundown so that you can see where it fits into the scheme of things. There's sole proprietors, partnerships, LLCs or limited liability corporations. Those aren't ROB eligible. S-Corps are pass-through entities. It's a tax classification, and it's not eligible. But the C-Corp, that's the one where it works with ROBS because it can issue stock to your retirement plan.
So the translation of all that is, if you want to use your retirement funds, you're not choosing a C-Corp. C-Corp is choosing you.
Welcome to the club. Nobody wanted to join, but here we are. We're going to do a deeper dive in a future video about entity types and why you choose one or the other, but that's just the really quick version.
Sounds easy, right? Well, once again, let me be the voice of reason. There are some pros and cons to consider here. So let's start with the cons. First, and most importantly, you are risking your retirement savings and there's no guarantee of return. But also, ROBS requires a C-Corp structure, which can complicate tax filings and ultimately complicate your exit. You have to follow strict IRS and Department of Labor rules. Improper management can trigger audits and even disqualification. You have to treat the retirement plan as a legitimate shareholder in your company, including all the same rights that other investors would get. So there's a lot to consider.
Yeah, but the pros are no taxes or penalties on the rollover, unlike if you took an early withdrawal to fund it. And I'd just like to point out, most people's retirement funds are invested in the market, and there's no return guaranteed there either. ROBS doesn't add any debt to your personal or business balance sheet. It also qualifies as that equity injection that we told you about in our SBA loan video for SBA 7A loans. So it can cover part or all of the 10% requirement. Funds can be used for any business expense, and we're going to tell you more about that, but it can also help you with funding the acquisition, early payroll, inventory, and more.
So no taxes, no penalties, but you are risking your retirement funds. And like any business investment, none of that's guaranteed. If your new business fails, you could lose your retirement savings along with it. Would you ever dip into your 401k to buy a business? Drop a yes or no in the comments right now. I'm curious how many of you would be willing to take that leap.
All this makes it sound like Vegas, but at least here the odds aren't stacked against you. You're betting on yourself, not somebody you don't know or don't know what they're doing.
Yeah, but C-Corps can be complicated to run and a little more expensive to set up than other business entities. There are very strict guidelines to this, and you have to follow them. But being able to use your retirement savings as the equity injection we told you about in the SBA loan video, I'll link that in the comments below, that part's pretty sweet.
Yeah. ROBS funds can cover more than just the purchase price too, which is also pretty sweet. You can use them for due diligence, lawyers, accountants, etc., earnest money, legal fees, even working capital once you acquire. And yes, even paying yourself a salary once you're actually operating a reasonable salary.
But the big caution is the IRS watches this very closely. This isn't some loophole to cash out your retirement early and just live on it. You have to run a real business with employees and payroll, the whole works. And of course, make sure you're working with a ROBS expert along the way.
Yeah. And here's something I didn't realize. You can combine accounts. So for example, you can link in your spouse's 401k or even a parent's like my dad. He worked for the government and has what's called a thrift savings plan. We can combine his funds too, as long as we set up the C-Corp so that he has ownership in the business. And you can also bring in other business partners. That can help boost your down payment power. Who would you roll in? Tell us in the comments. Bonus points if you actually ask them first.
Sure. So ROBS, you don't have to roll everything over. You can keep part of your retirement invested in the market in your current account and just move what you need.
Yeah, and ROBS often gets combined with other financing. So usually you have the ROBS and then an SBA loan or other financing like seller financing. It can be the equity injection and then loans do the rest.
Sounds simple, right? But you have to do the work ahead of time to set it up correctly.
Yeah, what's cool about ROBS is it works across your whole journey. Search phase, legal fees, acquisition, and then once you're operating, it can be capital to pay yourself a salary, hire staff, even offer 401k to your employees. And down the road, you can always buy it back, convert the C-Corp, exit, etc.
Tell me more about exiting.
Ooh, that's a hairy topic. So let's do a whole video on exits in the future. What exit questions should we cover? Leave them in the comments and let us know, and we'll build them into that video.
Cool. But the main point here is ROBS isn't just about the initial purchase. It's about financing the whole structure you manage throughout the whole life cycle of owning your business.
Yeah, and of course, it's not free. Providers like Guidant, who I've spoken with, and they had fantastic advice, usually charge around $5,000 to set up a ROBS, plus an ongoing monthly fee for administration. Now that you've got a 401k that has to stay compliant with IRS and Department of Labor, like we mentioned. You also need insurance and a 401k management, but your ROBS provider is the one that's going to help you navigate all of those complicated waters.
And that includes annual filings, 401k plan testing, and audit protection. It's critical you work with someone who's experienced in this. This is not a DIY project.
Oh, no, you do not want to be the person who's Googling at 2 a.m. how to IRS proof my business.
Definitely not.
In all seriousness, IRS auditing isn't super common, but it can happen to anybody. Yeah. Many ROBS providers also offer a legal defense as part of their package, and that can vary widely from provider to provider. I'm going to leave a list of providers and questions that you might want to ask them for a consult in the description, and let me know if I missed any great companies, any great questions. Leave them in the comments, and I'll keep those files updated.
Cool. So what about you? Would you ever use your retirement savings to buy a business, or does that just feel too risky? Are we crazy?
I mean, for us, it's not about risking our future. It's about building a future. And we're figuring this out as we go. If you found this useful, please hit like.
Yeah, we're just a little channel, and your likes make a huge difference. And we do read your comments. Keep them nice, please, but keep them coming.
Yeah, and if you could subscribe to our channel to learn more and drop your ROBS questions or wisdom in the comments, we'll bring them to a future video. If you're an expert in any of this and you want to hit us up and come on the channel, yeah, let's do it.
Let's do it. And remember, if we can figure this out,
you can too.
Thanks so much, everybody.